Hello and welcome to another video in accounting. In this video we are going to talk about sales tax payable. This is lecture number 3 in a series of lecture on liabilities. So do watch the other 2 lectures available on the channel on liabilities, which discuss what liabilities are and what determinable liabilities are. 2 examples of determinable liabilities that are discussed in the other videos are accounts payable and notes payable. So do watch those. In this video, we are going to talk about what sales tax is and what is the accounting for sales tax. Sales tax is generally classified as an input sales tax or an output sales tax. An input sales tax is a tax that is paid by businesses on their purchases. So whenever a business makes a purchase, the tax that it pays on those purchases is known as an input tax. Output tax, on the other hand, is collected by businesses from customers on the sales. So whenever a business makes a sales, the tax it collects from the customers is known as output tax. Generally, the taxes that are paid by the businesses on their purchases, i.e. the input tax, is recoverable from the government. That is, the government will refund the business for whatever taxes it has paid on purchases. On the other hand, the output tax is payable to the government. That is, the business will collect this tax from the customer and will hand it over to the government. The business acts like an agent of the government, gets the taxes from the customer, passes it to the government at regular interval. Now that could be monthly, quarterly, or even in some cases annual basis. In Canada, the sales tax takes the form of goods and services tax, GST, or provincial sales tax, PST. In some provinces, these two are combined and into one tax rate known as the harmonized sales tax, or HST. In Ontario, for example, the harmonized sales tax rate is 13%. Now, for us, the important thing to understand is how to do the accounting for input tax and output tax, and then determine whether we have a recoverable from the government or a payable to the government. So let's look at those things, starting with the input tax first. So XYZ Limited purchased 20 office desks as inventory. The price was 5,000 plus 5% GST and 8% PST for a total of $5,650 on March 1st. So let's record this purchase and the taxes that XYZ Limited paid on this purchase. Now, XYZ Limited is going to debit the inventory $5,000. That's the cost of the desks, and calculate the GST and PST to be $250 and $400. Now, XYZ Limited will debit these as well in the accounts known as HST recoverable and PST recoverable. The reason these accounts are recoverable are because this is the tax that is an input tax, which is to be received, which will be recovered or refunded by the government. So XYZ Limited uses the GST recoverable and PST recoverable account to record the taxes it has paid on the purchases. XYZ Limited will obviously credit cash for the total amount, which is the cost of the desk plus the taxes it has paid, $5,650. So this is the accounting for input tax. Let's look at the accounting for output tax. So XYZ Limited sold those desks for $10,000 with 5% GST and 8% PST on March 5th. Let's record the sales and the sales tax. So in this case, now XYZ Limited sold those desks for $10,000. It has to record the receipt of $10,000 plus calculate how much sales tax it received from the customer on behalf of the government. And the double entry is going to be to debit cash with $11,300, which is $10,000 of the desks plus $1,300 of GST and PST. So GST comes to be $500 and PST comes to be $800. Now, this is the output tax. This is the tax that is payable to the government. The XYZ Limited merely collects this amount from the customer on behalf of the government. This is not the money that belongs to XYZ Limited. This is the government's money. So therefore, XYZ Limited will use the accounts known as GST payable and PST payable to credit these amounts. And the revenue account, which is the sales, will be credited for $10,000. Now, this is the accounting for the output tax. So now we have to look at whether we have a recoverable from government or do we have a payable from the payable to the government. So let's look at that. Sales tax remittance. Sales tax remittance means paying the sales tax to the government. So uh, in Canada, there is a system known as the offsetting, which means is that the businesses are allowed to offset the taxes it paid with the taxes it received from the customer, giving as a result of tax that is payable to the government or receivable from the government. So if the input tax is greater than the output tax, that is, the business has paid more taxes on the purchases than it received on the sales, there will be a tax recoverable from the government. On the other hand, if output tax, that is the tax received from the customer, is greater than the input tax, the tax paid on the purchases, then there is a payable to the government. So let's look at XYZ Limited. Does it have a recoverable or a payable to the government? Now, here is the information about XYZ Limited. It's the end of the quarter and XYZ Limited needs to figure out if it has a tax recoverable or payable. This is the information of output tax, the tax it received from customer amounting to $1,300. And the tax that it has paid on its purchases amount to $650. So in this case, the input tax is more than the output tax is more than the input tax. Therefore, there is a tax payable to the government. So this is known as offsetting. You look at your input tax, compare it with your output tax, and determine whether there is a recoverable or a payable. Since XYZ Limited received $1,300 as an output tax and paid $650 as input tax on its purchases, it has to pay government $650, the difference. And how do we do the accounting for it? Here is the journal entry. So the journal entry is to debit the GST payable, debit the PST payable to since we are making those payments to the government, so these accounts will be debited. And the GST recoverable and PST recoverable accounts will be credited so that we can also offset this amount with the amount of payables. And the difference comes to be $650. That is the cash that XYZ Limited will pay the government. So this is how we record the payment to the government in this case. So I hope you like this video. Do watch it again, share it with your friends. Don't forget to like, subscribe, and click the notification icon so that you get aware of the future videos on the channel. So I will see you in the next video.